Hi traders, welcome to this Blueberry Markets video update with me, 𝖢𝖥𝖣yi, Senior Market Analyst. We're going to be discussing the dollar-yen price today as we've had some interesting developments in Japan, and in an unprecedented move, the Bank of Japan has accelerated its purchases of government bonds this year, and the uptick is believed to have spurred its recent decision to permit a wider range of yield movements. This maneuver seeks to alleviate the pressures it faces in managing long-term interest rates. A notable observation is that the yield for Japan's 10-year government bond has soared, reaching a pinnacle of above 0.6%. That's the image you can see on your screens right now, broken above that 0.5%, which was the established ceiling previously. This ascent is the steepest we've actually seen in nearly a decade, and is consequentially to the BOJ's more relaxed approach to interest rates. Now, furthermore, it's worth noting that in their July session, the BOJ confirmed its stance on short-term interest rate target, holding it firmly at minus 0.1%. Simultaneously, the reference point for the 10-year bond yield was maintained around 0%. However, a key distinction is their revised perspective on the 0.5% yield movement, now termed as reference points instead of stringent boundaries. The recent shakeup marks the inaugural significance policy shift under the leadership of Governor 𝖢𝖣yi. Analysts and market enthusiasts should take heed, as this could ignite anticipations of further policy modifications. Now, the market rumblings haven't been silent either. There is mounting pressures from enduring inflation and global interest rate elevations. There's also speculation that the BOJ might be reevaluating its traditional dovish stance. We also have things going on in China, slowdown as well. We saw the Bank of China cut interest rates on their 1 year. They didn't cut the rates on their 5 year, which was a little bit of a disappointment to the markets, but their 1 year was cut. We also have Jackson Hole Symposium coming up this week, and that could really affect how dollar-yen plays out, could really put an impact on how the Japanese yen performs and what the Bank of Japan have to do next. Now, looking at the table here, or the chart here, we are above 145, or above 145.50. That was the last time the Bank of Japan talked about intervening, was around these type of levels. Price has since rallied through that. We actually closed back below 145.50 last week. However, today we've had that sort of pop back up. I'm looking at the 4-hour time frame. I'm seeing a break of trendline resistance as well. This all kind of points into that direction. That is the risk tone still more risk on than it is risk off. I would say it is by looking at this. Could that then see the yen continue to weaken? If it does, where will dollar-yen head towards? Now, we have obviously spoken about dollar-yen a lot in the past, especially if you follow us on our live streams, and we did talk about previously that price could come up into the 148.75 or the 149s. We also kind of pointed out this bullish weekly channel that's been developing, so that kind of comes into the same sort of area around about that 148.75. But this rally here could also provide us with opportunities elsewhere. One market that's performing particularly well this week is pound yen, and has been performing well for a period of time. We talked about price finding support down back at the 177, closing back above the 180.50. Weekly chart is very bullish here, and we've been looking to potentially see price come up all the way into the 188 handle. Now, that will potentially happen if the yen continues to remain weak, and if we see this risk on tone continue, then 188 for pound yen is definitely not out of reach at the moment. Now, if you were looking at this market in particular, I'm going on the hourly chart here. There was a really nice strategy setup going in here today. You can see that price consolidated in around this area here. We broke back above the 50 MA. You could have took an aggressive move down last week when we came into the 20 and back above the 20, which was just through here. But going into Monday, we had that breakout. We had that sort of pop higher just through there, and now price has targeted those swing highs. So if we're expecting price to continue to the upside here, what we could anticipate is a little bit of a pullback continuation, very similar to what we should expect to see potentially on dollar yen, where we've got some room to the upside here. If I go down to the hourly chart through here, you can see that price has created one of those key patterns where we have the head and shoulders pattern. We break through it. Trend line was an ascending one. It kind of comes more like through there. But yeah, we've just rallied to the upside here. So if I was to format this in terms of strategy and I was to bring in my moving averages of the 200 and the 50 moving average through there, you can see that we're in line with the 50 and 200. Price has come back down in. We broke back above the 50 MA just through here. So that would be you know, a nice 70-80 pip ride that's happened at that point. But if price was to come back down into those averages, maybe even into this minor support level around about the 145.90s, you know, that could also spark some fresh buying into this market, and investors will probably be looking to get involved in this if it does obviously continue to rally higher just through here. So definitely something to keep your eyes on is the development going on here on dollar yen. If we do see the continuation, there could be a pullback, like I said, into that sort of 145.90. The average is catching up. The RSI doing its thing as well could give you could give traders a good opportunity to see prices trade higher. So hopefully you enjoyed that video update. If you did, leave it a thumbs up. Subscribe to the YouTube channel to see some more Forex trading content, and I'll speak to you in the next video.